Hello, traders. Welcome to the live stream on the 25th of April, 2024. My name's John. I'm going to be taking you through the markets today. So, we've had some interesting data drop already. We've got that US data today that we were watching and keeping our eyes on. We've had the US GDP quarter on quarter coming at 1.6%, but GDP price index rose to 3.1%. So, I actually didn't think this was going to be such a big mover in terms of dollar weakness. I actually felt that there was a little bit more interest in the core PCE index tomorrow. But obviously seeing that come down to 1.6%, we've actually seen a lot of dollar strength from the back of that, with that move on GDP there. We had initial jobless claims as well, coming at 207K. As well, so initial jobless claims coming down a little bit there as well, which was better than expected, which is, I think, the main driver behind this US dollar move right now. Like I said, the big thing with GDP there was I just didn't expect that to have much of an impact. So the Federal Reserve really much focusing on the labor market as well. So initial jobless claims there coming in at 207K. Is that showing that labor market resilience, which is something I talked about in a GDP video I posted before the event. Was talking about the labor market resilience there as well. So I actually thought if we actually saw any upside to this, it could have been a bit interesting as well. So, but tomorrow's the big event. Tomorrow is the big event for me with the core PCE price index year on year. A miss here, I think, could be pretty big. Hi, Rai, welcome to the stream. Hope everybody is doing well today. Let's go check out some charts. I've got some interesting tools that we'll have a little look at in a bit as well. I was kind of having a little look around and didn't actually notice that my FX book had these kind of tools, because I was looking at more commitment of trader report data, and you can actually see that on my FX book, if you go up to market, they've got these kind of areas here with correlations, cut data, things like that. So we'll take a little look at that in a little bit, whether it's a little bit better than other free data out there. But we're going to go over some of the markets as well as usual. Let me know what you guys are looking at. You know me, I've been fairly dollar bullish, and it's actually burnt me a little bit this week. I was short euro dollar, short Kiwi dollar this week, and yeah, got burnt a little bit on both of those trades, and now this dollar strength starting to come in. So bit of a typical week this week, trying to jump on the move a little bit early. So that's unfortunate for me, but we'll bounce back going into the end of this week and next week, I'm sure. So now we're starting to see a little bit of kind of a break in trend here, market trying to come back in towards that 105.50, which is interesting because we spoke about this a couple of weeks ago, whether 105.50 and below could be the point where we do see a little bit of buying coming in. Hi, Milo. Welcome to the live stream. Hope you're doing well. But remember, guys, drop the stream a like. I'd really appreciate that. We'll go over some tools as well in a little bit. But yeah, look at this sort of dollar setting up now. Is this going to be a sort of bullish move that we're going to get towards the 107s, especially if we do get that core PCE price index coming in a little bit higher than expected? I think that could be a very interesting thing to look out for. But we're also going to go over a few more charts as well. We talked about dollar yen a little bit. Dollar yen really interesting. Let's go flick over to some commitment of trader data. So I was on my FX book. We can see we've got market here, cut data. So if you want to take a look at that, just come over to this area here, and then we can drop down a little bit. Now I usually use barcharts.com. So if we go down to barchart.com. I've got commitment of traders data here as well. Let's see if it's updated. So if you come down to currencies, we can go on to Japanese yen. Okay, get rid of all these adverts. I'm just going to go to the cut chart. Now, we don't want the bottom area. We just want this one. We want the legacy charts here. But what's interesting, obviously, these are yen futures. So you've got to think it's flipped. Okay. So it's not, if you were expecting to see it up here, it's not. It's the yen futures chart. So it's kind of the opposite to the US dollar yen chart that you'll be familiar with. But what's interesting is the short side that we're seeing at the moment, and obviously Japanese yen just weakening considerably at the moment, and the Bank of Japan don't really seem to be that interested in kind of changing the narrative there right now, which I find super interesting. You know, I would expect them to, or I would have expected some kind of intervention. I mean, officials are talking about intervention, but the Bank of Japan aren't really taking much notice at the moment, and we're starting to see it reflected here in the COT reports. I mean, look at the selling pressure here from commercials, non-commercials. So the green line is the non-commercials, so they're trend followers, and you can see the selling pressure that we're at now. If I look left, we can't even see that last time we were at minus 165,000 sort of contracts there. Let's have a little look, see if we can go back. So we came close back in 2017 where you had that sort of run up in here. And I think this is really interesting because I think this is where the risk is at the moment. You know, we're going into a big event tomorrow with the Bank of Japan, and there's a lot of risk, you know. Let me just have a quick look to see if I can find that other chart of interest as well, just to see where people are sort of positioned in the market. Hello. What do you think that will happen to Bitcoin and Ethereum? Well, we've obviously had the halving now with regards to Bitcoin. Usually that is followed by a rally in the market. However, you know, the markets are a little bit different this time around in terms of the sort of impact of Bitcoin. And it all comes down to supply and demand at the end of the day. Usually the halving increases prices because it's a cut in the supply. Okay, so a cut in the supply of Bitcoins being mined usually would create demand for that. Ethereum, don't really look at Ethereum at the moment. Haven't been involved with Ethereum for a very, very long time. Just keeping my eye really on Bitcoin. And if we go take a look at the chart, it's not really doing anything at the moment. You know, we're very, very sideways. To me, at the moment, 60K seems to be a little bit of a base for price. We can see that it was the base down towards these lows here on the 17th of April and back on the 6th of March. So that seems to be the base. Whether price holds there, we'll have to wait and see. You know, if we were seeing this kind of price action with a little bit more lower highs, then I would maybe consider a breakout to the downside back to 50K. But you'll have to wait and see. I think the difference this time is we've got probably a little bit more institution involvement in Bitcoin now with all the ETFs and whatnot. So could we expect maybe a little bit of a shakeout first, a little bit more downside in the cryptos before seeing a kind of a rally back to the upside? That's some potential there. I mean, a break back to 50K would be quite interesting because that was kind of the recent sort of swing high after kind of reaching back towards those kind of all-time highs on Bitcoin. So I like the base of 60K. If it breaches 60K, though, you've got that nice 50K buffer, 51K. And then, you know, just kind of keep an eye on the price action at that point. See if you can get any kind of further upside. But haven't really been trading crypto all that much recently. Haven't been keeping up to date with it, really. But yeah, let's go back to the yen futures. So obviously the red line of the commercials, and you can see what commercials will be doing. They will be buying as price decreases, okay, because they'll see it as cheap, okay, and they're obviously in the market to hedge. And the buying pressure now is up at 163,000 contracts, which, you know, again, if we look left, where was the last time price was up at 167k? You know, we've got one closer area here back in 2017 again, and you can see price rallied off the back of that, but I haven't seen anything as close. Okay, so we've got this area here back in 2015 where price was around 178,000 contracts. So we're not at the all-time extreme yet on the yen, but we're very, very close to it. And, you know, we did see a turning point there where the Japanese yen did increase in value. So got to be watching this very, very closely. And I think a lot of risk is to the downside just because, or sorry, to the upside for yen, because so many people are talking about being short yen. So it's quite interesting to see where people are probably positioned at the moment. So I was actually looking at a sentiment. Let me just screenshot it so I've got it. And it's a dollar yen sentiment index. Now, I used to use sentiment indexes quite a lot. When I was looking to kind of trade a market, I would go and have a little look at the sentiment index, see where retail traders were positioned, because, you know, the saying is, you know, retail traders lose more than they win. So you'd rather be on the side of the other side of the trade, essentially. And I was looking at dollar yen positioning, basically. Let me just move this up here a second and see if I can find that. I just took a screenshot of it. I'll bring it over. So this is IG, provided by IG, and what their clients are doing. And basically what this is showing us is majority of their clients are net short, which basically means that they are long dollar yen at the moment. So it's really interesting to see this, because this would give us necessarily a bearish bias for dollar yen. You can see when they were starting to kind of reduce those longs previously, the market kind of fell away. So I like the idea of being on the risk side of that. Now, that being said, this is driven by some fundamentals here that are, you know, a Bank of Japan that aren't really looking to change anything yet. Now, are they going to wait to see the inflationary pressures from the recent wage increases? Potentially. One of my alerts just going off there. But we'll have to wait and see. TradingView just playing up a second here. Close a couple of these tabs. But just look at this move at the moment. Now, if we kind of just go to the bigger picture, I always like to look at the bigger picture here. Let's go to the monthly time frame and let's have a little look at kind of what price is doing. You know, breached that 152 high. You know, if we look left, it was quite a significant level of recent, and, you know, we've breached that. So do I think prices are still going more towards the 160? Well, on evidence here, then, you know, yeah, you know, the market is heading up towards that 160 handle, which would be a very, very big level of resistance, because I doubt we'll see dollar yen above 160, because that would be very, very significant in the market. We could argue it could be a little bit earlier than that if we kind of look at it as a zone. You've kind of got the zone between 159 up towards the high of 161. But yeah, I just find this fascinating at the moment with this move in yen. And, you know, it could still offer you opportunities elsewhere. I was looking at Aussie yen longs recently, and I did like the idea of being Aussie yen long, especially if we go look at it from a daily chart point of view. You know, we had this kind of situation here where the market was in a kind of bullish channel, you know, and we recently kind of dropped below these kind of daily lows, but closed back above. Very significant move there for Aussie yen. Oh, alert's going off left, right, and centre now. And now the market's just really nicely pushed to the upside here. Now we are at trend resistance here, and obviously we've had some data where the dollar's become stronger, you know, putting a little bit of pressure on the Australian dollar at the minute. So we're seeing that kind of move lower here. But you know, if you're looking for yen weakness trades, then you want to look for it against your currencies that are a little bit stronger at the moment. Aussie being one of those. You know, the recent CPI data out of Australia, just kind of showing you there, break of that trend there as well. Could put a little bit of pressure on the RBA to hold interest rates a little bit higher for longer. And that's probably why we're seeing a little bit more strength in the Australian dollar at the moment. But yeah, like I said, I tried to get short Kiwi dollar yesterday, and the reason being is because of where price pretty much is right now. So I'll go through that in a second. Jeffrey, hi John, thoughts on euro, pound, and silver? Yeah, I'll go take a look at those. Hi Vincent as well, welcome to the stream. Let's go and have a little look at those then. So euro, pound. I think we spoke about euro, pound recently, didn't we, in the last stream? And look, price was above the range, which was interesting. You know, I like the idea of price being above the range, but now we're coming back into the range. I don't like that so much now, but we are coming back and testing this kind of sort of down candle before the breakout. So maybe there could be something going on in this area here. Consolidation is usually an area where volume is being built up. So seeing that there's quite interesting. Yeah, I mean, is euro pound market I particularly want to trade at the moment? Probably not. It's a very range bound pair, you know. Not saying that I don't like ranges, you know, I do quite like ranges, but yeah, I'd be very, very interested in sort of what happens next from this point, especially because you've got that build up there. Obviously, very strong buying coming from this area in the past. Market has held up here. So I think if you're looking on the long side of euro pound, you want to see breaks of trend, right? Because breaks of trend just confirm the bias. I know that you probably want to be thinking about longs in here, but if price breaches this area here and comes back in, there's probably more of a probability that price is going to try and re-seek these kind of previous swing highs up towards that sort of 86.40. However, if we kind of hold below this kind of trend line here and hold back within this zone, you know, the market could just kind of hold here and push back down towards the low of the zone there, around about 85.50. So that would be my concern. My concern is always that if price comes back and into an area of value, does it hold back within that value area? You know, if I just take a fixed range volume profile, for instance, you can see, look, that is where the value is, you know, and that's why I say always look for those consolidations, because the market has now come back into that value area. Now it's your opportunity to see whether that value area is going to be held or whether that value area is going to be sort of broken back into. And at the moment, price looks to be sort of breaking back into it. So I wouldn't want to be long here at the moment. I think if we breach back above, then yeah, that makes a lot of sense to me. But do I want to be short either? You know, they're not fantastic, I don't think. Or wait for a nice bullish daily candlestick, you know, see where the daily closes. You can see we're obviously in that pullback phase now. If we are going to start making higher highs and higher lows here, then, you know, you would ideally want to wait for a nice strong daily bullish close there. Silver's quite interesting at the moment. A lot of volatility in silver. You know, it has been fairly bullish of late. If you take a look at the weekly chart, though, we're up at this level of resistance here, which, you know, to me was the overall targets. When we were talking about $22 longs, I didn't actually expect it to reach $28, to be honest. It was kind of that was the overreaching area if we were to break sort of $26 and above. So it's nice to see that it is at sort of $28 here, but you can see nice strong bearish weekly close potentially coming in. Depends on the data going up tomorrow. But if we were to see a stronger dollar here, I think it'd put pressure on silver, and silver might start pushing back lower here. If I look at the 4-hour time frame, you know, we are changing conditions here. The market has sort of was in that upward trend. It's now breached all these kind of swing lows in here. So that to me doesn't scream I'm going to get long. It screams maybe more to the short side. So the way I would kind of look at this is I always kind of look at previous highs and lows. We do have kind of a high that's being worked here at sort of $27.50. You know, maybe you could look at sort of this area in here where you've got a nice little trend line area. Okay, so I was kind of eyeing up that high in there, and the market's kind of retesting that. If a little look at the hourly chart, you can see it's these kind of hourly highs in here, like that. So the way I'd look at this is one of two ways. Obviously, the market could be turning bearish here because we've got a bit of a stronger dollar at the moment after today's data. Weekly chart rejecting a key zone. You know, if I wanted to be a buyer, you know, I always kind of ask myself that question. If I want to be a buyer of this market, you know, where would I want to be a buyer from? You know, where's the most logical place? Where's the area where I'm going to get the best, you know, reward to risk trade? You know, and for me, when I look at it, you know, down in this area here would be more appealing for a long idea. Okay, so I just kind of try and put myself in that scenario. You know, if I was risking a lot of money to go long here, would it make sense to do so? You know, and I'll let the market prove it to me as well. You know, if the market's in this consolidation here and it fails again at 27.55, you know, we come back in and we reject it, close back under, then that to me tells me a lot about how the market's thinking at this minute. If we breach this trend line to the downside, maybe come and retest the minor consolidation that's building, again, that kind of gives me an idea. You know, I think I'd rather be bearish unless the market tells me it's not. So a breach back above 27.55 would be, I'd be more leaning towards the idea that we could be seeing a little bit more upside to silver. But for now, I'd rather probably stay on the bearish side of things. Very similar to gold, you know. Gold, very interesting market. Ignore all these areas here. Been back testing a little automated system. But, you know, very bearish here at the moment. Bearish week. This could be, you know, very strong bearish week for gold. A lot of traders long gold at the moment, you know. So they might be suffering now. They might be in a little bit of pain here. And again, look at the 4-hour time frame. I like being a buyer of trends, but I like being a buyer at trends at swing lows, you know, all these different types of areas. And as soon as that low was broken here, you know, that gold pressure really came into the market, you know, and you can see it's been felt. So very similar here on gold. You know, we've got that sort of area here, 23.35s. If I can just prop a trend line on here as well, you know, could that potentially be a breaking move to the downside there on gold as well? So that's something to consider, especially if we do get a strong sort of weekly bearish candlestick. Because, you know, me looking at gold right now, where would I want to be a buyer of gold? I wouldn't want to be a buyer here, you know. And that's the tricky part. You can never really call a market top until it really happens. And that's why whenever I talked about gold and I was talking about targets, always target the previous swing high, because at least, you know, that's where sellers have been involved in the past. So it makes sense to get out at these areas where the sellers have noticeably got involved in the market. Okay, so always think about that. Vincent, Euro Pound and Aussie Kiwi are pairs I don't like trading. Yeah, actually, thoughts on Aussie Kiwi. So this is what I wanted to show you. Let's go back to Let me see if I can get this back up. So I was just on my FX book, just having a look around at like market tools and everything like that. And I came across this one here, and it was Forex correlations. And I talk about this quite often. Like I usually compare charts every once in a while just to see where correlations are. But they've actually got a little correlation filter here on my FX book, basically. And it's basically saying, look at the correlations there. So find currencies with a correlation lower than X percentage, find currencies with a correlation higher than that. So you've got like a daily, weekly. If I go into the weekly chart and just type in 80% and just scroll down here, I'm going to scroll down to gold. Right, actually, it was on the daily, wasn't it? Let's go to daily. So you can see Aussie Kiwi column here. I'm going to scroll down. And what I found quite interesting was that gold has an 87.6% correlation with Aussie Kiwi, which I thought was very, very interesting. If we have a look at it on the sort of other side of the scale, I guess, you know, you got minus 63.6% there, which is euro dollar. So they're negatively correlated, which is interesting at this current moment in time. But I just thought that was interesting. Aussie Kiwi, very, very strong correlation with the metals at the moment. And it's not too shocking because Aussie US dollar and gold tend to be correlated. But Aussie Kiwi, I thought was quite interesting to see that correlation there. So yeah, just a fun little tool to have a little look at, you know. Obviously, you usually see sort of yen pairs correlated with yen pairs, Aussie pairs correlate with Aussie pairs, and so on and so forth. But it's always good to have a little look to see if those pairs are correlated to anything, especially when it comes to commodities, you know. And you've got your commodities down here. I mean, there's not too many that we can call on. Obviously, there's palladium, platinum, gold, silver. I was hoping they would put oil on there, but I can't see oil on there at the moment. So maybe there's something that can be sort of expanded on. But I just thought that was a cool little filter just to show you if you were looking at sort of market correlation. So I will just put that in the chat if you are interested in looking at those kind of tools in there. And they've got a COT data area, which I thought was quite interesting as well. But I do think that barchart.com do it quite nicely in comparison. So definitely take a look at that. So yeah, guys, let me know what you're trading at the moment. I'm going to go and show you how I failed drastically on a Kiwi dollar short, as well as a euro short. So I'll show you those. Wasn't exciting trading for me, to be honest. I was up around about 1% on Kiwi dollar, and then it just turned on me, and I didn't get out. I kind of held it, thinking that, you know, it was just a minor pullback. So bit of bad management there by me, but I'll show you that one. So essentially, this is the area I was looking at yesterday. Okay, so, you know, I like to short from highs, be long from lows. And what I was really kind of focused in on yesterday was this area here. Okay, that high that formed. And the high was formed back on the 15th of April on the 4-hour time frame. Now, I wanted to be bearish these markets because if we look at the overall trend, we're in a downward trend, okay? And the buying pressure here hasn't been that aggressive. Obviously, we are in that pullback phase. But that's why I was kind of monitoring the 4-hour time frame. I was trying to monitor the 4-hour time frame for an opportunity, and I saw that price kind of rejected the area and then came back into it and rejected it again. So that to me was a potential sign. So here, really, this was my potential sign for a short idea on Kiwi dollar. So if I go down into my 15-minute time frame here, I'll have a little show you what was going on at the time. I'm just going to turn off the averages for now. Okay. Now, my strategy basically is if price rejects an area, okay, I'm going to be looking for a change of trend. Okay, so it come up into this area. We've had this rejection, and this is why I want to show you, because it's a strategy I've used all the time. It works, okay, but you are going to have those moments where it doesn't work. So I'm just going to show you. This was an example of that. Okay, could I have managed it differently? Absolutely, and that's what we're going to have a little discussion about as well. So this was basically the change of trend here. Okay, so this is what I mean by a change of trend. I mean is basically price no longer continues to make higher highs and higher lows. It starts to make lower highs and lower lows, essentially. And that's kind of what we had here. If I just kind of move this up, you can see that the market makes a new high, comes in, makes a lower high, breaches, and then that's my idea where I want to be a trader. Okay, I want to look for those trades and opportunities. So I ended up taking a short position on this candlestick close here. Nice reversal pattern there where you get a nice push into the level and a very much strong rejection away. So I went short in here, and I put my stop loss a little bit higher than usual. Usually I'd be quite tight, but I put my stop loss like above that swing high, which wasn't a bad idea, but I had the idea basically that price would come and fill this gap. And I talk about sort of low volume areas quite often, and this was the sort of zone I was kind of looking for price to fill within. Okay, so very much targeting the sort of other side of this range. Okay, and typically if price gets very, very close to my targets, I would bring my stop loss to break even, and I would take a lot of the position off and just leave it to see if the rest of the position comes in. But for some reason this time I didn't do that. I didn't follow my rules with this one. Although this was technically, I would say, a good trade that I took, because it came up into the 4-hour highs, it changed trend, it came in and rejected. That is textbook for me. That is a textbook trade. Now, the only thing I could have done really is gone a little bit tighter with my stop loss, which would have given me a better risk reward ratio. So if I was looking at the high there, Kiwi dollar 5 pips isn't a lot. So if I went for a standard sort of 10 pip stop anyway on this particular move, I could have increased my risk reward ratio. When it got to 1.5, take the position off, and then move my stop loss to break even and just let that run. But I didn't do that this time. I let it run. And then what I was talking about in a previous video was looking for areas where price would turn. Now, I didn't think price would turn here. That is to me, that's quite a random place to turn if I'm looking left. The only thing I can think of is it's taking into consideration the sort of area prior to that, where I imagine there'd be some volume. So price kind of rushed that area and it didn't retest it all that much. So that's the only thing I can think of, looking at that consolidation there. And if I was to kind of bring back on the fixed range volume profile, this is the only thing I can think of. There's a little bit of volume peeking through there. You've got the value area high of that zone. But to me, I felt that we could breach lower. We've got 5,900 down here as well, which was another area I like the idea of targeting. But yeah, this is just one that didn't work out, and I just wanted to show you that. And yeah, could I have learned from it? Absolutely. Where did things change? Well, I think once price kind of rallied really and started closing towards that previous swing high, that to me would usually be a little bit of an alert that maybe the market's not going to do what I thought it was going to do. We did start to make a move back to the downside there. And then once it changed trend here, back to the upside, maybe, especially because we have 2 closes above that high there, maybe that's when I should have considered, getting out of this position. And, I probably would have walked away with a break even or just a very, very small loss at that point. But it didn't. Left it open and then got taken out. And now look at what's happening to price at the moment. We're starting to see that sort of move down. So traded my strategy well, but my sort of management wasn't that good on this move. And that's just the way the cookie crumbles sometimes. So just to let you know that happens, and it does happen quite often. So Now I'm looking at this area here. Nice little breaking area there. We've got these lows down in here, which could be a little bit of trouble for anyone that's selling the market at the moment. So again, ask yourself the question, where would you want to be a seller? I want to be a seller potentially back up in this area here. Or, does price kind of make a high somewhere? And then can we use that high to sort of trade from to the downside? Because I still quite favor Kiwi dollar downside, especially if we get a nice daily close here. A daily bearish close could be quite interesting. Hi, Bongo. No worries. How's the dollar after today's fundamentals? Dollar's a little bit stronger on the day at the moment. Whether that is sustained, we'll have to wait and see. We do have that core PCE price index out tomorrow. And, looking at the market there, we're in an upward trend. 107s looks very, very, appealing for the market here. I don't see why 107s won't necessarily be tested at the moment. The dollar overall is still quite strong. If you look at the inflation rate has been rising. The employment rate is employment or the labor market is very resilient at the moment. So it all kind of points to a Fed that's not going to cut. And I think the market at the moment is kind of now jumping on any kind of data that goes against that rhetoric. So, when we see a drop in certain numbers, let's say initial jobless claims rose today, I think that would have been a big problem. And I think the dollar would have sold off quite aggressively because of that. But yeah, I think the market at the moment is just trying to jump on these sort of little data points where, could the Fed actually cut in June? And I think that's what the positioning has been all about. But I don't really see that happening, not with the data, especially the labor market. I think if we did see the labor market coming in a lot lower, it's been fairly hot at the moment. If the labor market started to crumble, then that's when I think we could have had some big changes in the potential of a rate cut. But yeah, I like this kind of 105 area. It kind of came in towards the wicks there and it's kind of bounced away with breaching trend line resistance at the moment. Would I like to see a close above this high? Absolutely. I think, if we got another sort of bullish candlestick here, I think that would be a good sign that maybe the dollar's back and we're going to see a little bit more upside. But I wouldn't be surprised, if we just kind of held here now, especially because we've got that, like I said, core PCE price index coming up tomorrow. So I wouldn't be surprised if we did hold a little bit here. Mr. Farouk, thank you for all the analysis you shared. Do you recommend inner cycle trader to learn? I don't know what the inner cycle trader is. I don't know what that is. If you're asking for if there's any kind of education available, then there's loads of free stuff on my YouTube, on the YouTube channel, on Blueberry Market's YouTube channel that you can have a little look at. Everything's all free on there if you want to try and educate yourself on that kind of stuff. We also have a VIP client room. So if you are a Blueberry Markets client, then there is a VIP trading room as well, where there's many analysts in there talking about different kinds of trade ideas as well. So that is available as well. He means ICD. Oh, okay. ICT. That's quite funny actually. In a circle. Okay, in a circle trader. Is that what ICT stands for? I didn't even know. Do I recommend ICT? Do I recommend ICT? Good question. No. I don't know if I'll get a load of hate for that because he's very big on YouTube. But do I recommend ICT? I personally no, but if it works for you, it works for you. I don't. I think you should be open-minded. At the end of the day, if you take some of the information that a person provides and it enhances what you do, then yeah, why not? For me, I did the whole thing of learning about every strategy I could, backtesting every strategy I could, looking at all the indicators, and then basically coming back to price action and whatnot. So, I would say always take what you see with a pinch of salt. But if you go and test it and you find that it works, then maybe add it to your trading. Okay. Even with what I'm telling you, how I position myself in the market, don't just do it because that's what I say. You should go and test out yourself. The reason why it works for me is because I've got experience using that. And that might be the same for ICT. A lot of people might use his techniques and fail and then say it's rubbish because they don't maybe implement it as well as he can, maybe. The other way around, they might implement it well and it works. I don't know. I haven't really spoken to anybody that usually uses those techniques. I know my dad actually uses a couple of the techniques, especially with the time zones and whatnot. But I don't necessarily use them myself. I just look at areas of demand. I try and putting it together my currency strength analysis, fundamental analysis, what market is going to be sort of moving essentially, or what do I think is going to be moving. And then I try and find support and resistance off the back of those. So I usually trade majors because majors are the ones that usually do move, especially sort of dollar pairs. But, like recently I've been talking about Swiss franc weakness in the market. So, the Swiss National Bank want to see a weaker Swiss franc. So, that could be something to look at. I mean, the currency strength meter at the moment is actually saying that you should buy Swiss franc, but I've warned everybody against that. It obviously had a couple of stronger moments, but let's have a little look at the Swiss franc actually, because if you look at dollar Swiss compared to others, dollar Swiss is still kind of on the rise. We are kind of trapped within this little bit of a range, but we are kind of testing the upper side of the range now. I still like 92 on dollar Swiss, or 92.10. But I haven't really been involved in this market, I must admit. If I was looking at this right now, I could see that we're kind of trapped between sort of two levels. We've got sort of the current highs at 91.50, and then if I climb that up and come back down to that low, we've got a low down towards 91.25. Now, there's a little difference in if you look at sort of dollar Swiss compared to most of the majors recently, dollar Swiss hasn't pulled back as aggressively as the others. So what does that tell me? That tells me that maybe the Swiss franc is a little bit of a weaker currency as well. I know if we go on to Aussie Swiss, this week has been pretty bullish for Aussie Swiss. So that's Swiss franc weakness, Aussie strength. I don't really know how it's done across the board because I haven't really focused on it. I was waiting for basically the currency strength meter to update. So usually I have to wait sort of a week for that to update. But like, look at CAD Swiss on a weekly. We're in that pullback phase. This week we've broken last week's high. So maybe going into next week, the Swiss franc will be a weaker currency again, and we can try and look to maybe exploit that weakness. But at the moment, it's on the currency strength meter as being strong, which I don't particularly agree with. I thought maybe it was just short-term strength that we were seeing, and it looks like I was okay, a bit right with that. Vincent, learn from John, learn the condition and add demand and supply. Thanks, Vincent. I appreciate that. I'm glad that's been working for you too. Bongo, I personally would recommend ICT. I use some of his technique and it works for me. My issue is fundamentals. Yeah, like I said, I think it's a good discussion to have, isn't it? I think obviously ICT is very big in the industry, very popular. A lot of people tend to take on his techniques and then build YouTube channels or social media channels off the back of that, which is quite interesting. So yeah, obviously, would they be doing that if it didn't work? I don't know, because I just think that if you were doing that and it didn't work, then is it a bit of a waste of time? But You've got to find out what works for you at the end of the day. You've got to find what works for you. You know, what works for me won't work for you. It may not work for you, sorry. What works for you may not work for me. This is what's so interesting about trading, because I talk to so many different people, and there are so many different ways that you can trade to make money. You know, you can trade futures markets, you know, you've got options and things like that. You've got scalping techniques, day trading techniques, swing trading techniques. You know, I met a lot of people, or spoke to a lot of people that use higher time frame stuff, whereas I use like a multi-time frame analysis view of the market. So I find it really fascinating, and that's what really kind of brings me back and really interested in the market is, you know, there's so many different ways to trade. And interesting that you've said there, Bonga, that my issue is fundamentals. That was my weak point when I first started. So I got, you know, buried into fundamentals, trying to learn as much about fundamentals as I could. And do fundamentals help me trade? I would actually say, does it help me trade? No. Okay, because there's a difference between fundamental analysis and trading. Okay, trading comes down to probabilities and strategies, whereas fundamental analysis just kind of gives you an overall sort of thought process of what could be happening with that market. Like I said, and this is a great example of this, right? If I kind of kept saying, you know, that the Swiss franc should be getting weaker, right? Because the Swiss National Bank have said they want a weaker Swiss. That is a great trading opportunity from a fundamental perspective. But if I was trying to buy the Swiss franc, especially against the CAD, the past 3 weeks, I would have been absolutely burnt, okay? That's not the point. The point is to get your overall bias and then do the technicals line up with that bias, you know, and then it gives you that idea for a trade then. So you could argue that you should just use technicals, but I think fundamentals keep you out of a sort of position where you're kind of expected to lose, essentially. And your technicals should be just probabilities, stats, you know. And it's for two very different things, you know. Being able to analyze a market and being able to trade a market, two very different things. I've been in situations where I've been trading the pullback essentially of a trend and made money doing that. I've been on the other side of it where I've been trading the trend and it's been making money. You know, it's all about the conditions that you think match your strategy. Can you go and implement it? Can you make it better? The reason why I built or was working with the currency strength meter was because I wanted focus. You know, there are so many currency pairs out there, and it's very difficult to just, you know, every day I was going like this. Basically, I'll get to euro dollar, it'd be like 10 p.m. UK time, because that's when the daily closes in the UK. And I'd be there, I'd sit through every single one, and I'd just hit the down arrow, down, 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 looking for that daily sort of setup every single day. And I actually found that I was limited. I was kind of focusing on the wrong areas a lot of the time doing that, because just because a daily chart closes in a particular way doesn't mean that it's going to move in a particular way. So I found it was best to try and isolate those by using currency strength and weakness to then give me a bit more direction into the week. And I found that that's what helped me. So I went on a bit of a rant there, but hopefully that made sense. Bungo's tried almost everything, to be honest. I've tried SMC as well. I don't know what SMC is. After learning SMC and a bit of ICT, my trading has improved. Okay, great. You know, that's absolutely fantastic. And at the end of the day, that's what you want. The only person that controls anything is yourself at the end of the day. And if you want to be better, it's you that's got to be able to find that. And, you know, that's all I'd say on it, you know. Let's have a little look at some other charts then. So let's have a look at the Dow, actually. I've been a big buyer of the Dow recently, and I took profits yesterday. And I'm glad I did. I'm glad I did because the daily chart is looking woeful now. And the reason why I banked it was because we came up into this level of resistance here. Now, what we were talking about was the 4-hour chart. And I quite like the idea that price had broken out of this sort of overall trend. And, you know, we'd broken above a 50 MA as well. If I just bring in the 50 MA, let me just put that back on the hours. Okay. And we broke above the 50 MA. So I started to go long in and around this area here. I actually banked it at 38.55 just through this area there. Again, it's been an area in the past where we've got strong sort of support and resistance. Okay. So that's what I was looking at, basically. I was looking at this area here, and then I saw that price was kind of slowing down towards that area. So I thought it's probably best to jump out at this point. And I'm glad I did because prices moved down. Stock markets are very interesting at the moment. You know, is there going to be more downside to the stock markets? That is what I would like to know, because volatility has been a little bit higher. If we look at the VIX here, you know, 7.89%. So the VIX is on the rise, and usually the volatility index would mean downside in stocks, and that's what we're getting at the moment. So I'm interested to see if this develops further. Do we see an actual breach at this low? Because seasonally as well, stocks tend to sort of underperform, or if they do underperform in April. I saw a thing from Markets Made Clear about if stocks underperform or the S&P underperforms in April, it can be very bearish for stocks usually. So yeah, I'm interested to see how the stock market plays out, especially because, you know, let's say core PCE price index tomorrow rises, and I think that would put a sort of a kind of a hard line on June being the time of cut. So I think that would be like, okay, that is definitely out the window now. And if they're not going to cut rates, then that would usually have a negative impact on the stock market. You know, if we look at 2022 year, that was the hiking or the talk of hiking cycles, essentially, right? All through this period here. So yeah, very, very interesting. And would I like to see the stock markets a little bit lower from a personal point of view? Yes, and I know that's probably a bad thing to say because as stocks decline, you know, certain things happen. But if I was looking to be a buyer of the stock market, you know, I would like to be a buyer a little bit further down, you know, especially on the Dow here, maybe 36K, just above 36K would be quite interesting. But I have to wait and see. I have to wait and see on that one. Smart money concept. Oh, okay. I have heard of that actually. I just haven't heard the abbreviation. SMC, smart money concept. Okay, now I know. Thank you. Let's have a little look at the VIX. So usually a VIX above 20 is quite bearish as well. And this was 2022 here. You know, we're having VIXs up to 38. This was obviously 2020, where we had the COVID pandemic, and that was when stocks obviously declined very aggressively. You know, look at the volatility index there. You know, quite a big move there. So to me, this looks like it's kind of trending a little bit more on the upside. Maybe if we look at sort of, you've got a bit of a break there in the potential trend here for the VIX. So that could be quite interesting for some further downside as well on stocks. So a quick flick over to oil, and then we'll end it there. Again, kind of rejecting $80 at the moment. Again, OPEC cutting that production down. So we should see higher demand for oil. And, you know, I would like to see potential higher moves there, you know, especially Brent. So yeah, let's see what happens here. But the weekly's in a pullback at the moment. Got to wait. Got to sit and wait. You know, unfortunately, daily is then kind of making these kind of lower lows, lower highs. So we need that rhetoric to change if you want to be a buyer. If you look at US oil as well, it's a little bit stronger, kind of rebounding that $80 area. So yeah, I'll be interested to see if this can change. No kind of real change here on the 4-hour time frame for now, because you've got that your last high is kind of here at the moment and your low. So, you know, maybe that can be the lower high. And if that breaks, you know, if we break above $84, then maybe that's the case for higher oil prices. Back above this 50.9, you know, nice little visual aid there to help us. Okay then, guys, I'm going to leave it there. Been running for nearly an hour now, so I'm going to call it quits there. But thank you to everybody that joined. I've actually got a webinar coming up on the 9th of May if anybody would be interested in that. We're going to talk about the Bank of England. We're going to talk about cable, pound US dollar, that is. And we're going to go through a few things on that. So I'll let you know when that is upcoming. And we'll have a little chat about that. We'll look at sort of seasonal analysis, commitment of trade reports, all that kind of good stuff as usual. And we'll go from there. So I'm going to leave it there. Thanks, guys. Thanks for everybody that took the time to drop me a message today. Really appreciate you all. I will catch you next week. Have a great week. And yeah, speak to you soon. Cheers, guys.